everybody. Welcome once again to the Winning Digital Customers podcast. I have an amazing guest with me today, Dan Armstrong, currently the Chief Digital Officer of Customers Bank. Very interesting organization. But before I talk about Customers Bank, Dan has been in the digital space a long, long time. He was with Netscape in the early days, for those of us that are old enough to remember Netscape. And he worked on design of some of the very first websites for companies like Pepsi, Saab, and Major League Baseball. So way, way back in the day when the blink tag was one of the coolest things you could do online, right? So thanks for being here, Dan. And I just want to mention Customers Bank, which is a major publicly traded bank, financial services company with $19 billion in assets, and is doing some very innovative things, including that they're one of the first financial services, certainly one of the first banks offering blockchain currencies to their business customers. So very interesting organization that you work for. So welcome, Dan, and I want to give you the opportunity to expand on your anything else about you think our listeners should know.
Sure. No, I appreciate it. Definitely. Yes, I cut my teeth in the very early ages of digital and have spent my career trying to find ways to broker that into the new technologies that are occurring. So the first one, after I moved to Europe in 1997, I spent about 20 years there, and I started to work on internet and what internet would mean when a mobile phone could access internet. So we were working on 2G technologies and 3G technologies and auctions for these licenses, and they were so expensive. You remember these 3G licenses in the end of the 90s were like hundreds and hundreds of millions of what became euros later on. And everybody was trying to figure out how do you maximize the value of these licenses? You're purchasing a license to broadcast 3G in Germany or in the Netherlands, where I lived. And the answer was that you need to use your networks, your capability, your mobile technology, your internet technology, and enable other brands, other kinds of things like Virgin Mobile, for example, or Cricket Wireless to be able to use these capabilities, and everybody can monetize based on what they're doing in their customer segments. So I spent many, many years working on these things, and I did them in Europe, and eventually ended up in Africa and Southeast Asia and South America, launching digital products and channels using basically what we learned, trying to do this in Europe, trying to do this in North America. I worked in about 43 countries, doing projects in many, many areas, and also trying to now, for Customers Bank, take back our lessons learned on giving bank accounts to people, allowing people to apply for bank accounts in digital channels, and bring it back to North America, United States, and see if we can learn something from those experiences. So.
Wow, 43 countries. I don't even think I've been to 43 countries, and I consider myself pretty well traveled. So that's amazing. And I imagine that those countries are pretty diverse. You mentioned some parts of the world that we probably kind of normally think of as probably being more similar to the United States, and some other parts of the world that perhaps from a digital footprint perspective may be quite different. What did you find was similar or different working on these major digital projects in different parts of the world?
Well, 43 countries is a lot, but the mileage is, getting there, so the travel is horrendous. But once you are in these environments, you see there's a lot of similarities between these countries, right? So I worked in developed environments all over Europe, UK for many years, Netherlands, Belgium, Germany, Spain, Portugal, etc. But then I worked in Central Africa, Rwanda, Tanzania, Zambia, South Africa, Botswana, Mozambique, and in Asia, China, and in the Philippines, Malaysia, and India, and South America. But what you realize is that there's more commonality between some of the challenges that people face than you think, right? You think about a language sector, or you think about business and export, import. But really, in many of these countries, you see similarities to even segments that we have in the United States in major cities and other areas, also rural areas, people that don't have a lot of money that are trying to get access to financial services. So working in islands in the Philippines, doing lending, working in central Rwanda, trying to convince people that the central bank or the government is to be trusted after historical problems in the 90s, as you remember, in Rwanda and these places. They have certain earmarks, people react to things differently. So in Rwanda, nobody trusts information coming from top down. In Tanzania, everybody wants to copy Kenya because they have tons of mobile phones and they have M-Pesa and money transfer services. So every country, how you handle, how you market, how you sell products is different. But the challenges are more or less the same. How do you trust a bank to be able to take the money out of your mattress and stick it in a bank, because that could be beneficial. You could save for a rainy day. You could get a credit score at some point. You could build a little bit of equity. You're not sort of living day to day. And I think these problems are replete in Asia, in Africa, and we see the same things in the United States: check cashing companies, payday lenders, predatory lending. There's a lot of things we can learn and bring back to the U.S. In order to sell products, make digital experiences that are appealing to people, and not just the flavor of the week.
Yeah. And what did you find was similar or different about access to technology? I think of some of these countries as places where, well, some of them, of course, are probably ahead of the United States, and think of places like South Korea and parts of Southeast Asia that have historically been ahead of us in terms of access to fast wireless and things. And then obviously some of these countries where there's so much poverty, the cliche as I think about people with less access to digital connectivity, is that an accurate perception, or is it really not like that? And what are the challenges in working in all these diverse environments?
Well, I would say so you have digital technology, which what I would call apps, right? So you have apps that disintermediate the provider, the phone, your cellular provider, from what you're doing. So you have Facebook that is on a phone, mm-hmm. provided by MTN Uganda, right? So the fact that we have apps now to be able to allow you to securely log in and transfer value to different places, so you don't have to go to Western Union, you can actually transfer money to your grandmother up country at a fraction of the cost, because people have enabled these kind of capabilities. And when I was there, this is like the very beginning of the iPhones, so you didn't really assume that people had an iPhone or an Android phone. So we had to use text, we had to use USSD, which is a text-like kind of capability, to be able to engender the instant payments in different ways. So you'd use simpler interactive models, you'd use simpler interfaces, and you'd have to do marketing to convince people that this was trusted and this is how you use it. Here's how you can pay your utility bills. It makes sense to keep money in the bank account because you can pay your water bill, your electricity bill from your phone if you use these kind of patterns. So I think that just looking at what trust is and how you deal with trust is something it's universal. A lot of times we would say, hey, pay your bill right now, and you push the button and the money would be gone and you pay your bill. It's too fast. It's too fast for a lot of people. It's a secure transaction. I'd like to so we would add seconds to the transaction to make it seem like we were thinking
working
about
on your transaction kind of thing.
Yeah, it's a perception of security that's sometimes more important than actual security, right? So all these things I think are lessons that we've learned in multiple environments. And how you apply them and how you think about it is like A/B testing, focus groups, and marketing, right? So in some places we would do raffles. Every time you use mobile banking, you have a chance to win a moped, and 10 people are going to win a moped this month. We would sort of tie it to the value that people are seeing in these environments. In other places, we'd use theater, we'd use radio things. We get people to design jingles, for our ringtones and things like that, just to sort of promote the pizzazz in electronic banking and those channels as trusted channels. Some of the countries, you can't actually apply for a bank account on a phone or on a laptop. There's laws that say you have to be in a bank branch. So we would come up with all these concepts to have kiosks or like small little places that would have temporary banks that you could come to and achieve your accounts there. And then at some point in these countries, you want to withdraw some cash. But where are you going to do it? In the middle of Rwanda or on an island in the Philippines? So we would go out to all the supermarkets and retailers. Would you like to be a cash in and cash out location where you could actually make a commission and act as an ATM in this area where you already have the infrastructure to be able to support people getting bank accounts? So I think all these things have relevance to Western Europe and North America. And I'm not saying everything is the most interesting concept, but they're all about sort of engendering trust and having people use these technologies more and more and more, which benefits us as banks. But I think it also definitely benefits people to use banking services to their full potential.
Yeah, and what you say about trust is so interesting because I can certainly understand how in some of these countries, especially where the governments are less stable, the concern about national currency is not completely unjustified. Today, of course, we mentioned in the intro that your company has a blockchain option, and now we see so many. I don't know if it's up to trillions of dollars, but certainly many hundreds of billions of dollars circulating in Bitcoin, Ethereum, and other kinds of blockchain-based currencies, which don't even have a government behind them. And similarly, in a way, we've got people keeping substantial balances, whether it's with Starbucks or whether it's with Venmo or PayPal. So we have our money spread out, it seems to me, in more and more places that, in theory, we need to trust that money that we've put there is going to be there when we want it. I don't know. I almost feel like people are less and less worried about it, but maybe that's just in my world. I mean, what do you see in terms of that? As you've moved to being in the blockchain business, you yourselves as a bank essentially become an issuer of a kind of currency, which requires a whole other level of trust than just to put money in a bank. So how do you think that those trust lessons that you've learned from these third world countries around governmental banking, reflect on today's payment revolution?
So I would say that the stuff we've learned in other countries is very relevant to consumer business and small business, right? So consumer accounts where people are willing to do Venmo and broadcast the reason for their transaction in Facebook and other kinds of areas. So having payment capabilities for consumers, and I think to a certain extent for small businesses, because they have same kind of payment in and out and merchant acquiring kind of requirements, carry the same kind of characteristics. You need to be open, you need to be secure, you have to be proficient in regulating what's going on in these environments. But it's about capabilities. Right? So it's in and out capabilities. It's about trendy kinds of simple friction alleviation. And crypto plays a role there, but it starts to play a role in international remittance, in a bit more speculative, because we're talking about open valued coin values like Ethereum and these kinds of environments. What we've chosen to do in Customers Bank is enter the business environment and use what these technologies enable in terms of speed and instant payment capabilities. So instead of opening up our environment to unstable coins that values, has a lot of funny stuff, to our business customers, which is quite interesting. After the PPP environment, we have many hundreds of thousands of more customers than we thought we had before. And they might not think they're customers. Maybe they think they just got their loan, and we'd love to give them more capabilities and more functional payment tools. So crypto for us is making instant payments between business entities that sort of minimize the risk, really make things fast. And larger businesses having instant payment capabilities could really impact their bottom line. Trying to enter it from an area that is focused on business value and not hype in a way, and maybe we'll get further and further into what crypto could really mean for small businesses or consumers over time. But it's pretty clear other banks like Signature Bank in the United States has done a great job in trying to pioneer some of these areas. So we're thinking that if we could provide value, research the technology, internalize it, professionalize how we're going to support it, then we can build value over time. We can choose to go down market or up market, or consumer market or business market. But at least we've done so by knowing what crypto means for us instead of just the buzzword crypto and launching kind of products. So it's a small step approach we're taking, which I think allows us to choose the best technologies for our customers.
Yeah, absolutely. And so you guys have issued your own stable coin, is that right? Or is this part of other banks or?
Other banks in the network, but you have to have a lot of banks to be able to do it. You have to have another phone and another network to make a call. So for us, to make really standardized instant payments is using crypto wallets in our own ecosystem is the first step. And then moving towards other people that embrace the technology saying, listen, hey, can we all benefit? Rising tide lifts all ships. If we can all benefit from instant payments, can all of our customers take advantage of this, and we all benefit also with those relationships. So for us, it's about enabling instant payments in a closed ecosystem, then expanding it going forward, and not doing crazy stuff like unstable coin. We'll get to that later, but hopefully we'll get to that after the regulatory powers have caught up to what to do with it, because we don't want to, play with fire,
And I'm curious if you have an opinion about, the originators of a lot of cryptocurrency. They have almost, sometimes it feels like an anarchistic philosophy. They're trying to take down the man. It's about being independent of financial institutions like a customer's bank. So it's interesting, of course, to see the same technology being used to create new products by, a major financial services company. What would be your prediction? We've certainly seen other waves of digital disintermediate. It used to be if you wanted an airplane ticket, you had to go to your travel agent and sit at the desk, and they, so many companies that were following, so many companies have had their models of how they made money turned upside down, and in some cases eliminated, because just a simpler digital way made the value they were creating unnecessary. Really extreme points of views. Somebody might say, banks themselves might not be necessary in the future. Lending will all be done with smart contracts on crypto. I don't really have that view myself, and I'll take my travel example. We haven't really gotten rid of travel agents. We still have Priceline and Expedia and Orbitz. We just have a sort of a different type of travel agent who takes a much smaller cut in a much simpler process of, but as much as the travel providers would love to have nobody in the middle and sell everything direct, and they try it, it's not really the way it is. So anyway, I'm just curious what your prediction is for banks or title companies or all the other kind of financial companies that some say their existence may be threatened by what blockchain and crypto could do to financial services.
Well, I mean, I see the point. I'm an early internet guy, so I got involved in web commerce before there was HTTPS, right? So we were selling stuff online at Office Max, and I just don't think that's the answer in terms of financial services relationships, right? You go to a bank as a consumer because you trusted it's at the corner. You might never go into that. I mean, in 1998, right? The average amount of times that our customers at the Rabobank in the Netherlands went into a bank branch was one time every 7 years. 7 years, right? That was the average. So the people just wanted something to give them security in case there was a problem. They wanted to go down and do stuff. We didn't even have cash in most of the branches. If you wanted cash, you had to order it and it would be ready for you. There's no money in those locations. So for me, the concept of the technology is enabling capabilities, but as your business customers grow or have more complicated issues, other complicated requirements, especially in the lending space, you require some guy. You need to go talk to your banker, your friend. You need to go explain what's really going on, because we don't have an automated way to do more complicated and to be honest with you, profitable banking business. So Customers Bank very much specializes in talking to our customers about what their real business needs are, looking at customized areas. So we're going to force and try to promote what works in terms of technology and automation. Crypto falls into that, but it's not at the expense of what you, I think, as a corporation want to go to a bank for, which is a guy you can talk to, a lady you can speak to about your lending needs, the ability to sort of negotiate terms or do something a little bit outside the ordinary because you have history with us. You know what we do and how we do it. So I think that there's going to be a mesh of technology. I know our CEO talks about high touch and high tech at the same time. I believe in that. To get it to work perfectly would be a home run. So we're working very hard to combine those two things together, and this crypto story has something to do with it. But if you have a problem, you want to talk to somebody, we are there, which is not it's not to be ignored. Every time you had a problem with an e-commerce company or whatever, and you called somebody and they solve your problem immediately, I think you became a customer for a long time. You liked it. You kept on shopping with them. So that human touch when things don't go right or when you have something that you're not clear about is not to be underestimated. And we're trying to find the balance between those two things.
Yeah, no, absolutely.
I don't know if that answers your question.
And actually, I think that's a great segue into what I wanted to ask you about next, which is the blocking and tackling of that? Because I know you're working on the customer journey for many aspects of the way your customers interact with the bank, from onboarding to all the different types of interactions they have, whether it's lending or day-to-day transactions, foreign currency, as we were talking about a minute ago. Can you tell us a little bit about how you go about that? How you go about transforming the experience. What have you found that has worked well, and what have you learned as you've tried to apply all that you've learned from your whole career in digital now to like a very modern leading bank?
Well, I think that the approach is two-pronged, right? Your first approach has to be customer experience. What is the UI? What's the UX? Where are the pain points? Where you have a hard stop? How does it look? How does it? How do you can solve the problems of many other organizational members that need to sign something? Like how do you do that in a digital environment where it's just you applying for an account? So the digital UI UX customer experience is one part of it. The second part in the United States and many other countries is looking at what you have to do, right? What are the perfunctory processes that you have to go through? And some of them are regulated. Some are risk oriented. So you want documents, you want assuredness that that is the person you're talking to. But some are done because that's just how you've always done it. So challenging that concept, like why are we still doing this process? Why would this matter? Does this really benefit? Can we eliminate this process, or can we sort of streamline that process? So we're trying to do these three things together: customer experience, challenging ways to think about what we've done forever in terms of documents and uploading and signing, and then looking at how that plays in the regulated environment, which honestly is challenged with digital account opening and digital banking, and for good reason, because it is the Wild West, and it's very hard to keep track of.
Certainly I found in many industries this issue of regulations not always keeping up with what seems they were reasonable 15 years ago, but they haven't been updated, and now they're meant to protect consumers. Now they're just getting in the way of things that might even be safer. Digital ways of doing things, like a wet signature is so safe. Like someone can't, and yet you do it digitally in a way that's even safer. And some regulations say, well, no, because 10, 15 years ago it wasn't there. At the same time, I've definitely seen in many companies this blurring of what's actually regulatory versus what's our comfort level. And I've found myself in many meetings over my career, not necessarily meetings I enjoyed, but ones where we were trying to get down to, okay, someone would be telling us, someone from compliance or legal, whatever, these are the regulations. We'd be like, what does the regulation actually say? Sometimes they have requires this, and then when you look at the regulation, like, well, it doesn't actually say that. But it's a question of how liberally or conservatively, or how the way it's always been interpreted versus how flexible you could be in a way. And any thoughts or challenges, if there's people listening who are nodding their heads going, oh man, I fight that fight every day. How do you sort of maximize your role in trying to drive innovation? Well, of course, we don't want to step over the line and actually be violating regulations, but we also, in my opinion, don't want to stay 20 feet back from them if it keeps us from delivering the customer experience that will actually be better for our customers.
Yeah, so it's an organizational issue, I would say. Who is in your organization responsible for these things? Are they willing to go outside the box and think about what these regulatory requirements really mean? So I've prided myself, at least in Customers Bank, on being the most innovative, barrier-pushing guy, and I'm also the best friends with legal, compliance, third-party risk management, and fraud. So I'm like a honorary member of all those teams. So I try to fight their battles, but try to push the envelope, because I do think that there's a lot of smaller institutions, credit unions, smaller banks that don't want the stress. They don't want to push it. They don't want to do something different, because it's a lot of work, a lot of responsibility to make sure you're monitoring an innovative way to do these things. And with the size and the staff of a small bank, is how do you do it? It's very, very difficult to do it. But so I've tried to present a role that that is completely compliant, always interested in understanding the regulations, and trying to push into these areas. Like, how far do we really need to do these things? And we've had great successes. And our compliance and BSA groups, our fraud groups, have been incredibly flexible in how they're thinking about these things. And the answer as to how to get everybody to be flexible is to include them in the design process. They're part of customer experience management. We design these onboarding processes with our most regulated fraud and BSA groups. So they have a say, they can talk about it. We can talk about the difference between going left or right in a choice. Do we need this information? Do we present this UI here or later? So we involve them in the process. So it's not just some guys in the design group or communications and marketing. We ask them what, and where could we do something that would give you a better or easier job to catch fraud, catch other things. So co-creation has been the answer in Customers Bank for sure. And it's been great and very successful. And we'll do it again tomorrow. It's a continuing process. So.
Indeed. Yeah, I mean, we started talking about compliance, but as you bring up the issue of fraud, I think that's such an interesting one because we work so hard every day to try to make digital experiences easy. And the often unintended byproduct is it can make it easier for fraud. In the old days, if you wanted to rob a bank, you had to take some personal risk. Like you had to show up at the bank, with your guns and your getaway car. Today, there's obviously ways of sitting at your computer in your basement or in Eastern, Europe or whatever, and potentially be engaging in fraud in a way that is simpler, quicker, easier, write a bot, hit 1,000 banks at once, and you can't get caught because you're a half a world away. How does that factor into your thinking about making things easier, but at the same time, or is that your experience? Let me even see if you would concur with that sort of point of view, that one of the secret downsides of digital is we make it easier for our customers and we also risk making it easier for criminals.
For sure. And luckily we've had a trial of fire. We had a division called Bank Mobile that had a student disbursements business that was doing 375,000 checking accounts a year, more than Bank of America and all their branches, all digitally for student loan disbursement. And we launched the T-Mobile Money product in 7,500 T-Mobile stores, online as well. So that's all digital business. So we learned very quickly how to balance business interests, safety, security, and compliance, and getting new customers. And the answer is it requires you to think a little bit differently about data. So instead of thinking, oh, I've checked the box and I've gotten all these products that the regulator likes, like LexisNexis or Experian or credit scores, you need to think a little bit more broadly about data and combining data together, because all these different data sources are coming from different places. They have different origins. So if you're combining them together in an elegant kind of way, you can add one and get three, if you will. So you're combining independent data sources to, at a very low price point, allow you to make a decision about somebody you don't know, a faceless applicant. And so you can say, oh, well, I could take a picture and a selfie and all these kind of other things, but data itself is the key, because data will give you the risk assurance that you're taking a chance on a digital customer. And then, of course, that after that, you have to monitor and see what's going on. But I think our predilection has been to be more open and more forgiving. If we're using so many data sources to make a pretty informed decision, let's open the account and give them the benefit of the doubt, because we're using so much data in our processes that that we're pretty sure that that person is who they are saying they are. I don't know if that answers your question, but it's a complicated issue. And again, tomorrow it's going to change, because synthetic identity and a lot of gang wars and our participation with things like public-private partnerships with the FBI and the Secret Service and the U.S. Department of Treasury help inform that discussion. So it's a continued discussion. And when new technology emerges tomorrow, it'll change again. So
well, hopefully some of these same technologies that help, quick ad in front of me and figure out really who I am and what I am all about and what my intention is can also help with these things as you describe. I think that makes a lot of sense. Well, we have only a couple minutes left, and what I'd really like to just ask you is any other ahas or key lessons learned. You've been in the trenches in this for so many years. I mean, just a few, of course. You're not showing your age, but I'd be curious if there's anything else that, if speaking to an audience of executives who are fighting the fight every day to try to drive. Sometimes, it feels like they're pulling a mountain up a mountain, at some large companies, trying to drive the kind of transformation that's necessary to keep companies relevant in the face of so much change and so many changing customer expectations. Any other kind of key learnings or insights that you would share with that group in terms of how they can be even more successful?
Well, so what I would say is, as a bank customer, right, I would like my bank to invest in the future, right? Not like spend tons of money, but invest something in the future so they could tell me what's a good technology, what's not, like it offer me something. I'm expecting my bank to do some investment in technology so I don't have to go figure out what the best things are. That's what I'd like my bank to do. And that challenge gets exponentially more complicated the smaller your bank is, because do you have the ability to do that? Do you have the ability to invest in understanding technology? Do you have the ability to try out different things if you have a limited budget, a small amount of FTE? And what we've learned here at Customers Bank is that it's possible to do, right? There's a good amount of innovation that a community or a super regional bank, a bank our size, can do that benefits our customers, gives us a lot of learning, and gives us a lot of economies of scale. But it's not like you just have to go to vendors and say, I want to hire some companies to help me check the boxes on things. And it's not like you want to do everything yourself. You have to find that balance that matches customer experience and the customer expectations, as well as your own organization in a way. And I don't know, I found a great location here in terms of more risk and less risk, where we can say, cool, let's just do something. Let's try crypto. Let's partner with people like Upstart and other kinds of alternate lending platforms. And let's still protect our good business, our commercial business, our mortgage lending and commercial real estate business, C&I lending. Is there a way that we can create an environment where we can do enough of that to still stay not ahead of the curve, but at the beginning of the conversation, at the same time still accommodate how most people are thinking about banking in the traditional sense? And I think a lot of small banks, anybody under 5 billion, 10 billion, credit unions, you just need to believe that they can do a bunch of that. Not everything, but some of the innovation and the thinking in this area, because I know their customers would also appreciate it. So,
yeah, well, that's a great point to end on, and we could keep going, but our producer is telling me we have reached our allotted time. So, thank you so much, Dan. This has been fantastic. Would ask everyone in the audience to join me in thanking Dan Armstrong, the Chief Officer of Customers Bank, for bringing us fantastic insights on this episode. And of course, I want to thank Dan and all of you for listening and watching, as always, to the Winning Digital Customers Podcast. Until next time, keep transforming.